Hi everyone, hope you're all doing well, and today we're going to talk about Corsair stock just because I feel like I've not talked about this company for a couple of maybe weeks, months on the channel, and I feel like it's worth doing a little bit of an update into this company. I'm pretty much saying that I'm still very bullish on this company, and to be honest with you, over the last kind of few months I've got even more bullish on this company, to the point now where I'm actually considering could Corsair break into my top 3 positions in the stock market portfolio, and that's something I'm considering. And today I thought I would also share why my thoughts are that, and why I think it should come a big position in my portfolio, and why I think it's one of the best opportunities on the stock market right now, especially if you're a growth investor, even a value investor. This stock could apply to both of them groups of investors as well, which is amazing. You don't normally kind of have a growth investor and a value investor interested in this stock or the same stock, because you kind of look for different things. But if you were looking for a bit of growth, this has it, and if you're more focused on value, you could probably say this stock has it as well, with how cheap it's trading at. So makes it very interesting pick overall for me. Now personally for me, one thing that I like to do is it's very easy when you're investing and looking for companies to buy. You look into a company and go, oh, look at this is where it could go, or this is what they've got in the pipeline, and you know, it could go up to here. But sometimes it's really good when you're investing into a company to kind of go, okay, what is the risk? Worst case scenario, what happens, or how much lower could this stock go? And the thing with this sort of company is that when you kind of look at the point of view of how much risk is involved in this company, the risk or the downside is very, very limited because of the valuation it's trading at. And when I get onto the valuations today and show you the valuation, you'll kind of see it and go, well, if it does go lower, then it's just unbelievable, like cheap. But the moment you look at what the market's trading at and what other stocks are trading at and what you get with this company and the valuation that it's at, for me, you look at the risk, there's not much risk there. You look at the reward, what this company should really be trading at, and it's huge. And that's what's kind of got me really interested into this company, because quite often I'll look at a lot of growth stocks that have maybe no profit or are just getting to profitability. But when you look at this company here, you kind of think, I'm very confident to have my money in this stock, and you look at the downside, and the downside is very limited. So yeah, that's why I'm really interested in this stock and why I'm considering making it a very big position in my stock market portfolio. It is already, I believe, maybe my 4th or 5th biggest position, but I'm even thinking going higher, top 3 potentially. So if this video is useful, hit the like button. If you're new, subscribe, and we'll take a look at Corsair. So Corsair stock, ticker symbol CRSR. It's currently trading at $28. It IPO'd last year, and since trading at $17, if you got in at the IPO, you're doing very well. The stock is up from the IPO. It then kind of peaked out around February time, as a lot of these like small market cap stocks have done, and like a lot of small market cap stocks at the moment, it's pretty much been flat or downtrended a little. So it's kind of following the market at the moment. And since the kind of peaks of this stock, which was $51, which if I go from here, it's actually 45. So it actually, on that day, it actually got to 51, which is crazy. But yeah, on here, you can see it was actually $45 where it closed. And since then, it has fallen down a little bit and had a bit of a sell-off. When it had this bit of sell-off towards March time, that's when Corsair got on my radar. I was originally invested pretty much in Turtle Beach, and then after being invested in Turtle Beach, I also bought Corsair and own Corsair. My Corsair is a bigger position than Turtle Beach. The reason why I'm more kind of interested in Corsair than Turtle Beach, even though I do love them both, is that I feel like Corsair gives or has more diversification within its products. Like, I think Turtle Beach relies a lot on headset sales, which I think in a console cycle does well, but you take away a console cycle, the headsets slow down in sales. Now they did acquire Rocat, and that's why I'm still holding it, which I think is great. But the thing is you got Rocat there on Turtle Beach, and that's basically mice and keyboard. Whereas when we go into the products that Corsair have in a few minutes, you'll see they're a lot more diversified in their product range, and also they're a #1 player in this area as well, which is what I like. So personally for me, that's why I was interested in Turtle Beach, but now at these sort of prices, I'm more interested in Corsair than Turtle Beach, but I still own them both because I think they're both very good companies. But this drop is where it kind of got me interested in it, and even since I kind of started buying it, it's down a little bit. I've been averaging down quite a bit on this one. I'm about break even now at $28. But yeah, this is the chart history of Corsair. So it is a small market cap at 2.6 billion, and we will be talking about this in a few minutes, which is the P, which you can see here is 18. Now it was founded in January 1994. So quite often people make the mistake of thinking this is a very new company that's only been around a couple of years. It's actually been around quite a while. And when we take a look onto the website, you can see here, very good website. I really do like the interface on this. You'll see they have a lot more of their products here. So you've got the cases, keyboards, headsets, audio, gaming PC, cameras, and they're adding into a lot of these product range. There's a new face camera that's out as well. So the big thing here is that you can have gaming PCs if you want gaming PCs, if you want just the components in the PCs, streaming gear, so if you're into streaming, they cover a lot of things here like lighting, stream decks, audio, cameras, gaming gear, so you even have keyboards, apparel, accessories, lighting, mice, mouse pads, chairs, and them chairs are absolutely amazing. As well as that, the people don't realise they actually own a couple of brands, which is the Elgato brand. They also own the Scuf gaming brand, and they've recently purchased this brand here, which is Gamer Sensei, which basically is a platform which, if you wanted to kind of book a coach to kind of train you up on a game, you would book a coach and they would basically help you get better at a game. And yeah, it's crazy to think that that's where the gaming industry is at now. It's massively grown over the last few years. And if I go here on this, you can see here, this is the gaming growth year by year. You can see great gaming is one of the biggest TAM opportunities here, and we're talking about Corsair, one of the biggest leaders in the gaming area with a great reputation. If you ever go on the reviews of Corsair, fantastic reviews. But then you're also considering this, the growing gaming market is, you've got, you know, the gaming itself and people that use the parts or Corsair products. You also think about streaming. Streaming's growing at a huge amount. You've got esports that's growing a huge amount. And quite often people tie this company to just being a gaming company, but the realistic thing about this company now is that it's just not gaming. There's a lot of people that kind of work at home that think, I want to have the best parts for my PC. And quite often they go for gaming parts, or they just want the better products to work on every day. You know, a lot of people are working at home now and think, okay, I want to kind of get, you know, I don't want a £5 mouse. I want a mouse that I enjoy using, or a keyboard that I enjoy using. And the thing is that we say that Corsair fits, you know, gamers, but actually now it's gamers, it's streamers, and people generally that work at home like using Corsair products. You know, personally for me, I don't do too much gaming on a computer, but you know, the products that I use on my computer when I'm editing videos, doing work, I have a gaming keyboard, I have a gaming mouse. So, you know, even the people that are working at home, you know, Corsair takes from that as well. So there's a lot of income streams than just being into gaming. And this is the big thing as well, is, you know, the big change in the last kind of few years, even from like 10 years ago, I think is the change of people go, you know, gaming's cool, streaming is cool. People, if you ask a lot of, you know, the teenagers that are growing up now, or even the kids that are growing up now, a lot of the kids that are growing up now, the teenagers that are growing up right now, you ask them what they want to do when they're older. You know, quite often they'll either want to be a professional gamer, they want to be a streamer, a YouTuber, esports. A lot of kids growing up now, you know, the big changes from 10, 20, 30, 40, 50 years ago, quite often you would hear people go, a lot of kids growing up or teenagers growing up, you know, I want to be, you know, a footballer, I want to be like, you know, Ronaldo. Nowadays, if you go ask any kid, they'll pretty much say, oh, I want to be a YouTuber, I want to be a streamer. And that's the big thing, you know. Another big thing as well at the moment is, you know, having these really cool setups. You know, it's come to a point of view where it's, you know, it's cool on social media to kind of take a photo and go, oh, look at my setup, and have, you know, 2 nice PCs running, a nice gaming keyboard, a nice tower PC, lighting around the room. It's cool, and that's the big change in the last few years, and that TAM here is growing because of the people that are coming in and the new people that are coming in, and also the work at home craze, and it being more kind of acceptable for people to work at home, or just general use, to use gaming keyboards, gaming mouses, gaming parts for the PC. So it's a massive TAM growing here. So considering everything we just said there, that the gaming space is growing huge, and not just the gaming space, streaming, people working at home, why do you think that over the last kind of few months this stock has kind of underperformed and nearly, you know, lost half its share price in a couple of months? You'd think, okay, if that's the case, why is the share price dropping? Well, if we go on to the recent earnings were actually pretty strong. However, there was a slight miss, and that is maybe what caused the drop. Soft sales forecast, and you'll see here it dropped 5%, but I believe on the day it actually closed down like 10% on the day. Now you see that it said that it was a soft outlook, but the outlook was actually in line with expectations. So you just got to be careful and dig in some of these articles because sometimes the word isn't correct. Now if you look here, revenue was up 24% year over year. Now remember, that's a really important thing, growing at a 24% rate. Now in the recent earnings, there was a little bit of news that semiconductors were a little bit short, and also there was some problems with the shipping containers, which pretty much every company at the moment is having quite a few problems with a lot of the logistics side of it. But overall, when you look at those earnings, the earnings were very good. Sure, it was a slight miss, but this company is still growing at 24%. But like I said, the company dropped 10% in share price after these earnings. Now, the crazy thing about this company is one of the reasons why this company is down so much is because people said that this company was a company that was only going to benefit from the CV. They said, oh, Corsairs, don't invest in Corsair, sell out of Corsair now because the CV is ending and they won't be able to grow any sales. And that was what analysts said. Now, analysts originally, if I can go on to their projections here, which I've noticed have changed a little bit now, is they were projecting Corsair to grow at, I believe it was 3%. And in my previous video, I think I've actually got that on a photo of that. They actually projected the sales to be flat on Corsair. Now, because Corsair are smashing it, growing at 24%, if I go here, 24%, they've actually gone, oh, you know what, we can't, they're actually going to carry on growing. And one of the biggest criticism of Corsair and the big sell-off is that, oh, it's just a CV stock. It's not going to do that well. It's not going to have any sales going forward. But you can see here, Corsair is still, after really hard numbers to beat, where everyone was locked up, everyone worked at home, everyone kind of went to, playing on games even more and upgrading the setups that they were on, and people working at home and wanting new keyboards and new mices. Even after really hard numbers to beat and everyone writing off this company off, it's still putting in fantastic double-digit growth. 24%, that's not a small amount, especially with really hard numbers to beat. Now, what analysts haven't done here is they've upgraded this year's forecast. If you look at next year's, this is set to grow at 5%. Now, personally for me, I don't think they'll grow at 5%. I think they'll grow more towards 10%, and I think analysts have numbers wrong, like they did previously, but we won't ignore that they've changed that now and upgraded it, but they're still projecting 5% growth here. And if we do go onto the valuation side of this company, and this is where it comes to what I said earlier, the risk to reward. The risk here for me is crazy. There's hardly any risk and the reward is huge. We are currently at a trailing PE of 18. So if you think right now, the stock market average PE is 20. 20 is the average. So this company is below the average of the stock market. So you're saying to me this is probably a company that deserves to trade a little bit lower than the stock market. The companies that grow at 3-4% trade at a trailing PE of 20. Let's just go back onto what the company just did. 24% year over year. 24% with really hard numbers to beat. So you're telling me the company deserves to trade less than the market, even though it's growing at 24%. Companies that grow revenue at 3 or 4% deserve to trade at 20. Never mind if you're growing 24%, growth deserves to trade at a premium. And is it trading at a premium right now? No way. So first of all, that is a key indicator there's something wrong with this valuation. And then it gets a little bit more bonkers. Do you know why it gets a bit more bonkers? So we're going forward PE. Forward PE is the forward earnings for the next 12 months. Because this company is going to carry on growing this year and put in really good growth, the valuation drops even more. And it drops down to a 15 forward PE. So this company's, like I said before, the average is 20. This company's trading at 15 below the market average, and it's about to put in 20% revenue growth. Growth companies do not trade at 20 Ps, they trade at 30 Ps, you could argue 40 Ps. So right now, you can see the company is massively undervalued from just that one metric. And that's not even considering the TAM and how much this area is going to grow in the next 2 to 5 years. The thing is, if you start running numbers, 2, 3, 4, 5 years down the line, you imagine what that P is going to be down to. You think about that revenue growth as well. It's crazy. You look at the price to sales ratio. A growth company trading at a 1 price to sales ratio. We have companies nowadays that are that are growth trading at 30 price to sales ratio, and this is trading down at a 1, which is absolutely bonkers. And then if I just go on the past revenue growth and profit growth, you can see here, if we go back from 5 years ago, let's go from 2016, that will make more sense. You've got 595 million, 29 million in profit, a 4% profit margin. Let's jump 5 years. 2 billion. So that's a massive increase there. That's nearly a 3x on that revenue, which is huge. 29 million in profit, 153 million in profit. Once again, a huge amount, nearly 5x on the profit they're making. Profit margins, 4%, 7%. So if you're kind of saying to me, in the next 5 years, if they're to repeat something very similar, and you're picking this already at undervalued share price, you're already picking a company up here that should be $10 and is trading at $5, for example. You want to be investing in companies that are not trading. The share price isn't matching what's going on in the company. That is happening. You're already picking an undervalued company in here, and you think about the TAM and how much it's going to grow. If this company was to repeat the same numbers in the next 5 years, you think about what that growth is going to be on that share price. It's massive. Now, one of the weak points I do have had with this company is the financial side of it and the balance sheet side of it. Debt to equity, it did acquire a lot of companies, so I understand why there's a lot of debt on here. But over the last few years, because revenue has increased so much, profit has increased so much, it is paying down debt, and now the balance sheet is actually at a point where I'm okay with it. 51% debt to equity is fine with me. Previously to here, this was a bit too much for me, but it's getting there. You look at assets to liabilities, I'm okay with that. You look at the cash to debt, not too bad. I would like a little bit more cash on there. Like I said, they have been acquiring a lot of companies. They are paying down the debt, which is okay. That's the only little weakness that I do have, but it's for me still investable. So as you can see, there's so many bullish points with this stock right now. Amazing TAM, really good growth previous and coming up as well, really good earnings, and the valuations are just crazy cheap on this one, and that's not even considering the growth over the next 5 years. Now, you're probably saying there must be some sort of weakness with it or some problem with the company. There is one. I'll tell you the one problem that is with this stock. And the one problem with the stock is the biggest shareholder, which is Eagletree. So you can see here on people that have been selling the company, you can see here the last sale was in June with Eagletree, but you can see here through the previous history, Eagletree has sold a lot of shares. Now, obviously, when you come onto the stock market, you know that the chance of a recent IPO, insiders are going to sell. It's always going to happen, and we know that Eagletree previously looked to sell Corsair before they came on the stock market and then decided to go on the stock market. So we knew this was going to happen, and it will happen, or it has happened over the last few months. Will they sell some more? We don't know, but we knew there was going to be a part of it where coming onto the stock market in the first kind of few months, a few shares would be dumped. Now, they do still own 57% of the company, so it's still a huge chunk. We'll see what happens there. It is worth saying that, we don't know if they are going to sell more, if they're going to kind of hold that stake now, but that is something just to consider. That could be an insider that does sell a lot of shares. It's also good to see that the third biggest shareholder is the CEO and the founder. Once again, reducing the stake, but as expected, it is an IPO. They probably want to release some capital because it's so easy for them to release capital after being, a private company for nearly 26 years. So for them to have a valuation like this and be able to sell shares just so instantly, it's going to happen with an IPO. So personally, for me, I'm not getting caught up too much, but one thing I am going to keep an eye on is that Eagletree, just to see what's kind of happening with that one. So it's just worth me saying that is the only one little risk to this company. But with that one risk considered is, for me, in the long term, in the next 2 to 5 years, are people going to be bothered about that? No. That's just kind of a little bit of stakes in the company being released after the IPO. For me, when we look at the company in the next kind of few years, and we look at the growth, we look at the valuation that it's at, for me, I can only see this going higher. And like I said, the downward risk is very limited. And with the valuation, for me already, I'm looking at this stock and thinking, this stock should be probably at least a near $40 stock trading at a $30. this is massively undervalued already on the share price. And then you start considering the TAM. You know, this is a massive growing company. You know, this is a company that got wrote off and weren't going to grow. And now people are starting to realise, okay, maybe it'll grow this year, but next year's flat. But that won't happen. It'll just carry on putting in steady growth. Gaming's here to stay, and it's going to be a massive growing sector. And these are one of the number one players in that area. And I think there's massive growth down here, especially down at this valuation, because I think I'm already picking up a stock that is, you know, nearly, you could argue, 100% undervalued. It should be double. It could be double where it is right now. And then considering that I'm already picking a stock that should be $10 at $5, and then you add in the 5 years growth, if it was to repeat something that it's already previously done in the last 5 years and do it all over again, I'm going to be laughing, because them financials are going to improve, and it's going to be crazy how much that's going to go up. So for me, it's one of those that I look at this stock, and rather than looking at how much potential there is, because as I've just said, there's loads of potential, I then look at what risk there is of this going lower, and I can't see there being too much more risk for it to go lower. So for me, it's one of the best opportunities as a growth investor, as a value investor on the stock market right now. And like I said, at the moment, it is, I think, even my fourth or fifth biggest position, but potentially in the next kind of coming few months, it is one that I'm debating maybe making into my top 3 anyway, so it's one that I'm considering. So I hope the video was useful anyway for you guys, and I wanted to just kind of do a bit of an update on that one, because I do feel like it's probably, considering where Tattoo Chef is right now and other stocks that are kind of going up a little bit, one of the stocks that's still at decent prices, I guess, at the moment. I know some of you guys voted or wanted to see a video on Callaway Golf. If you are a patron, I kind of mentioned it a little bit on the US portfolio review. So if you're a patron, do go check that one out. But if you want to see an individual video on that, I could potentially do that in the next few days anyway. So let me know if you do want to see it, and I'll see you next video.